Hello and welcome to The Explainer. Today, we are going to crack the code on something that seems complicated but is absolutely essential. Figuring out if a company is actually healthy. And we're going to do it in 3 simple, powerful steps. But first, let's kick things off with a puzzle. Picture this. A company is making headlines, selling more stuff than ever before in its entire history. Sales are through the roof, but at the exact same time, its profits are actually dropping. How on earth is that even possible?
And this isn't just some textbook question, by the way. Nope, this exact situation, record sales, falling profits, is a real-world mystery from a huge global company, and today we're gonna solve it together.
And the company at the heart of our puzzle is a name you definitely know, Sony. Their latest financial report has this perfect contradiction, which makes it the best case study for us to really dig into.
So, get this. For their 2024 fiscal year, Sony Group posted the highest sales ever, an incredible milestone. But in the same report, their profit went down. Just looking at that, it makes no sense, right? To figure this out, we need the right tools. You can't just look at one number and know what's going on. That'd be like a doctor just checking your temperature and sending you home. No, you need a full checkup. And for a company, that means using 3 key financial statements.
And here it is, our simple 3-step framework. It's all you need. Step 1, we check the profit using the income statement. Step 2, we look at the company's risk and stability with the balance sheet. And step 3, this is the big one, we verify the actual cash situation with the cash flow statement. Profit, risk, cash. That's it. That's the method.
Think of it exactly like a health checkup for a company. The income statement tells us if it's generating energy, profit. The balance sheet shows its core strength. Is its foundation solid? And the cash flow statement, well, that checks its circulation. Is real cash, actual money flowing through the business?
Okay, time to get our hands dirty. We've got our framework, we've got our mystery company. Let's put our 3 tools to work on Sony's numbers and figure this thing out once and for all.
Okay, this table basically tells the whole story. Right at the top, you see it. Sales are up a massive 18.6%, a record. But look right below that. Operating profit is down over 7%. The notes tell us why. Rising costs. So even with more money coming in the door, it cost even more to run the business. But then you get to the bottom 2 lines, and that's where the real story is. Let's just take a second on that sales number. An 18.6% jump is incredible for a company the size of Sony. It means their main businesses, gaming, music, you name it, are absolutely booming. And yet, here's the number causing all the confusion. A 7.2% drop in profit. This is our puzzle. They sold way more, but rising costs ate up all that new revenue and then some. This is exactly why you can't just read the headlines. And this chart just makes it crystal clear. You see this huge green bar for sales growth shooting up, and then this red bar for profit going in the complete opposite direction. So, what gives? Which number tells the real story? We need a tiebreaker. And here it is. This is the plot twist. Operating cash flow, the actual real cash the company generated from its day-to-day business, is up a whopping 36%. This number cuts through all the accounting noise. It shows that Sony's ability to generate cold, hard cash is not just fine, it's getting way, way better. So, what's the final verdict? Well, it's actually really positive. Yeah, the reported profit took a temporary hit from higher costs, but the cash flow, the actual lifeblood of the company, is stronger than ever. Add to that a really stable equity ratio, and you see its foundation is solid. Puzzle solved. So, the big takeaway here? The Sony case is the perfect example of why you can never, ever just react to the headline numbers. Getting the real picture takes a little more digging, but it's totally worth it. Now, let's be really clear what this is for. This isn't some secret trick to get rich quick in the stock market. All this public info is already baked into the stock price, and a truly deep analysis takes time. What we're doing here is building a skill to assess the long-term, fundamental health and value of a business. All right, so we know what a healthy company can look like, even with confusing headlines. So now, let's flip the coin. How do we spot the danger signs? Let's build our own little field guide for spotting financial red flags. First, you got to know about a sneaky trick called window dressing. It's a fancy term for when a company basically cooks its books. It manipulates the numbers to make it look way more successful than it actually is. They're hiding the problems.
And here it is, the single biggest #1 warning sign of window dressing. It's the complete opposite of what we saw with Sony. If the income statement says the company is making a profit, but the cash flow statement shows it's actually losing cash, that is a gigantic red flag. It means the profit might not be real.
And beyond that main sign, here are a few other things to keep an eye on. If it's taking a company a really long time to collect payments from its customers, they might be booking fake sales. Or if you see a huge pileup of unsold products in their inventory, they could be hiding the fact that nobody's buying their stuff.
And finally, here are 2 hard and fast numbers to watch for. First, the equity ratio. If this number dips below 20%, it's a warning that the company might be drowning in debt. Second, the liquidity ratio. Just think of this as asking, can they pay their bills next month? If that ratio is below 100%, the answer might be no.
So it all comes back to this. A single number, like profit, can easily mislead you. It's only when you look at all 3 pieces together, the profit, the risk, and the cash, that you get the true story. The numbers themselves don't lie, but you have to listen to everything they're trying to tell you. Thanks for joining me on The Explainer.